In this video, I'm going to walk you through a simple strategy to trade springs in an uptrend. So you want to identify a previous downtrend. That's what helps you confirm the spring, but the spring will ultimately lead to that uptrend. So that's what we're doing. We're trading a move to the upside. So this is going to be very specific to looking for downtrends that have stopped and then analyze and confirm the consolidation that you're looking at. It needs to be accumulation. Now, relative to the time frame that you're using or trading off of, let's say you're trading off of a 5-minute bar chart or a candlestick chart, it may not necessarily be a really significant downtrend on the daily time frame or the weekly. So don't look at the daily time frame to do this. You want to be aware, of course, of the overall trend direction on the larger time frame, but this is an intraday trade. This is an opportunity to get into a trade with the expectation that you're likely to hit your take profit levels within the same day. Sometimes it'll take just a little bit longer, as you can see here in this example. So this is a 30-minute candlestick chart. Now I have a couple of different indicators in here that I'm going to review. Some of them aren't necessary. They're not necessary, but for some of my coaching clients that are learning my trading system, these indicators are going to be familiar to you because we also look for these reversal patterns, incorporating some of these indicators as confirmation. Again, it's not necessary. At its simplest form, trading a spring can be done without any of these indicators other than, let's say, just the 20-day moving average. So the way I would tell somebody if they were just starting off and they weren't familiar with the rest of my reversal strategies, I would say just use the 20-day EMA by itself. 20-day EMA by itself. That's one of the first indicators that we're looking at in order for us to confirm that what we're trading, which is a low and a reversal, a failed attempt to go lower and then the reversal and then the move to the upside. Is this safe? Is it an opportunity to actually trade and expect price to move significantly higher in the opposite direction than it was trading in? So let me walk you through the entire setup. So I'm going to get rid of these indicators and some of these support and resistance lines. And I'll walk you through the entire setup. So one of the first things that we want to do is, as I mentioned, regardless of the time frame, and this works best for day trades. So a 5-minute bar would work out fine, 5-minute candlestick chart, that would work fine, 15-minute, even a 30-minute or 1 hour, and this is a 30-minute. So I want to see that there was a downtrend at some point in time. So let's say we're actually sitting here and we see this downtrend and then it starts to flatten out and it starts to go sideways. Well, that's the first clue that this is possibly finding a support low. Now, I mentioned that you could look at the daily time frame, weekly or monthly, and it may be that price on this particular day stopped here on the 30-minute or the 5-minute, and it stopped right at a significant support low that you could pretty much only see, let's say, on a daily or a higher time frame. Sometimes that'll happen. Price will stop. You're looking at a 30-minute, but you can't see, the big picture. So you've got to take a quick look at the daily just to be aware of critical levels of support and resistance. So that's the first step. We want to see price slowing down, coming to a stop, or at least temporarily, and then we want to see price filling out, moving sideways. Now there are 2 support lows, 3 if you count this one. So I look at these. I want to be paying attention to these. Sometimes they will have an impact on price. But the actual low here is that white hammer. So I'm going to go ahead and identify that. So that's my 1 initially. That's my low. Now I might have to move it. I may be wrong, but this is how I set up my trade here. So I'm going to put a label with the number 1 right down here. And what I'm looking for with these 1, 2, 3 patterns is again, a spring is going to work when there was a downtrend that was stopped and price starts to move sideways, starts to move inside of a range of accumulation. And then it makes a new low where it attempts to break below that number 1 low, the price swing that creates this low. So I'm going to see a 1 to the downside, a 2 pull back to the upside, and then 3, another swing to the downside that takes out number 1 but doesn't close too far below number 1, and then there's no follow through. That would be my reversal pattern where I could trade it or expect it to go back up. And that reversal, that number 3 wave or 3 move below number 1 is my confirmation that price is holding and it's not going to go any further. And then I look for the reversal candle, which all leads to the spring. So you've heard me say many times that you can make a really good living trading up thrusts that fail. That would be in a move to the upside. We'll talk about that in another video. Or springs, which is a move to the downside where it takes out a low, but there's no follow through, and then it quickly reverses. So let's keep going a little bit further. I want to find my number 2. So number 2 would either be this high or this high right here. Sometimes you'll see it right in the middle. So I've got my 2 here, and now it looks like price. Let me go ahead and put in the 2. So now it looks like price, and you'll see that this thing moved. Sorry about that. I forget if there's a way to actually lock these here. I can't remember if there's a way to lock the text at that spot. But anyway, you get the point. Here's my 1 low. Here's my 2. This is a wave counting. And then here's 3. Now, in order for me to really visualize this and see that this is creating that spring opportunity, I also want to have a trend line drawn in here. So I would draw a trend line at that support low, that number 1 support low. Well, I'm going to go ahead and leave it there for now. And then we're going to take this out a ways. And here's my reversal. So what it looks like at this point, this is my reversal bar. Now, again, there's a few things that we want to be aware of. Support. This should be moved over here. I'll be moving it around quite a bit. There's our 1, which is the last selling point, last support low. We have our automatic reaction, which is number 2. And then it starts to move sideways. And then it dips down one more time to take out or test the lows of 1, the price swing 1. And then, of course, the support line also helps me to confirm. Sometimes they'll close just slightly below it, but there is no follow through to the downside. So this is going to be my number 3. Okay, and that's my reversal candle right here, this bullish engulfing candle. Now, the next step is that in order for me to expect price is going to go higher and for me to trade it, I want to see this 20-day moving average. It needs to be pointing up, and as of yet, it is not. So to see another test or a retracement wouldn't surprise me. So let's move this out a little ways. And you can see that here it starts to hold right around that support level. It continues to hold a second test of this area right here. And then it starts to turn up. You can see the moving average starting to turn up. Now, with this signal here, that's my confirmation and my entry for the most part when price takes out that high. But we didn't see any immediate follow through. This was a slightly different pattern that took slightly longer than usual. Again, you can do this on a 5-minute bar chart. I'm going to show you many examples of a 30-minute where it moves a lot faster than this. But this is one of those examples where you have to prepare for these things that may not line up exactly as you expect them to from the point in time you see it. So remember, let's go back to the signal itself. I didn't have confirmation of the 20-day moving average pointing to the upside. It must be pointing to the upside. I have the signal bar itself, the candle, the reversal candle, but I don't have confirmation of the 20-day moving average. It needs to be indicating that price is going to continue to move higher. So that's my 20-day moving average starting to move and point higher to the upside. So I'm going to watch this consolidation in these tests, and then I'm going to wait for a break above that high. And here's where we get a break above the high. So it's right here. So you'll notice how long this actually took if these are all 30-minute bars. So they don't normally take this much time. Very often we see a reversal maybe a test, and then it resumes and shoots right back up and takes out the high. So this would be the area that I would get into the trade. Now, sometimes these reversal signal candles will take place after a move like this to the downside where it tests the low and then it moves back up and then it comes back down and tests one more time, but it doesn't take out the one. And then the moving average starts to move higher, and then I get a bullish engulfing candle a lot lower. And at that point, I could get in on the close of that bullish engulfing candle with a stop just below the low of that pullback and the bullish engulfing candle, as long as the 20-day moving average is pointing to the upside and we already have a confirmed spring action, which means that price has approached the one low, price swing low, has taken it out in many cases, but there's no follow through, and then it reverses and shows a strong bullish engulfing reversal candle. That's it. Or bar. I also like to trade this off the bar chart. Now the reason that the Bollinger Bands are in here is that I have a reversal strategy that incorporates the shape of these bands, the upper and the lower band. What happens on the move to the downside, this is additional forms of confirmation. The candles will be closing outside and below the band, and then they go sideways and there's a pullback, and then it comes back down and tests one more time. But when the reversal bar actually takes place, it needs to occur above the lower band if I'm going to trade it back up. That's one of the patterns that I look for. And then, of course, divergence here in the CCI. Now, I mentioned, you can see the divergence here on that last move here just before the reversal. There's a lot of divergence here. However, it didn't go any lower, and you can see there's divergence on the actual low here on the CCI, which is what I need to see. However, you can trade this pattern without the Bollinger Bands and without the CCI indicator. The CCI indicator and the Bollinger Bands, they just give me an additional form of confirmation. They're not the basis for getting into the trade. The basis for getting into this trade is, number one, identifying a downtrend and a stop of that downtrend, which is here. And then mark that as my number one spot. That's my number one low. So it's a swing to the downside, forming that low. The automatic reaction high is number two. And then it starts to fill out and move sideways, and then I get another test of that low, which it's a really good idea to draw in a support line because you want to see where these candles are closing in relation to that support line. Gives you, again, another visual confirmation. And then I wait for the reversal. In this case, when the reversal took place, the 20-day moving average was not moving higher. It wasn't pointing to the upside. So I had to wait a little while longer, and I expected a retracement, which is usually the case. Very often we're going to expect a retest and a retracement anyway, and this one actually did it 2 or 3 times, and it just took a long time for this one. This is sort of an unusual pattern, but yet it still worked out. It's the structure, and you can see that price never took out the low of the price swing that created the signal candle itself. I just needed to wait for more confirmation for the 20-day moving average to be pointing to the upside, and then for price to take out the high of the actual signal candle itself. When I did that, the 20-day moving average was also pointing to the upside. Now, as far as targets, well, you could target psychological levels. You could use the Fibonacci tool and draw it from that low if you've got the clean A, B, C price swing, and then look for extension targets. You could also use a point and figure chart. Point and figure would actually incorporate all of this data here, and it would give you a very specific calculated target that you could trade it to. And it would also help you identify where your stop loss is. So this is how to trade springs on an intraday basis. Again, you can do this without the Bollinger Bands and without the CCI, but what you need is the 20-day EMA. You want to do it on a small time frame. You want to trade this and execute this on a small time frame, 5-minute, 15-minute, 30-minute, 1 hour. It's a little more challenging to do it on the daily time frame. You're going to have to wait a while. You're going to miss a lot of these little opportunities. And this is a very short-term trade opportunity. So make sure that you have your take profit targets in mind. And then again, we want to make sure that we identify a downtrend that stops, pulls back, and creates that automatic reaction. So that's 1 and 2. And then it fills out, goes sideways, creates that range of accumulation. And then we see a final test, and we don't participate in this final test. We just let it all happen, and we confirm. If everything is trading out exactly as we expect it to, then all of this is going to line up correctly and it's going to give us a really good trade that looks just like this. This is a great opportunity, and these take place over and over and over again on all of the different time frames: 5 minute, 15 minute, 30 minute, 1 hour chart. It's a great intraday trade opportunity. And again, they don't all take this long. This is the euro dollar. Sometimes when I trade this and execute this, let's say on the pound dollar, it's a lot faster. You can trade this with gold. You can trade this with futures. You can trade this on any pair. As long as you're learning how to identify that spring, you're going to be able to see this, and it's going to be really dramatic and really obvious to you, and it's going to be a really simple, easy strategy for you to pick up extra money throughout the trading day whenever it sets up.